Did you know Australia's household debt has reached over $2.3 trillion? That's more than the entire economy of some countries, and it's growing faster than wages. At the same time, property prices are soaring, leaving millions trapped in homes they can barely afford. Experts warn that if the economy falters, millions of Australians could lose everything: their savings, their homes, even their jobs. But what's really terrifying is that most people don't even see the warning signs. Inflation is climbing, unemployment is creeping up, and the government is drowning in debt. Even small shocks, like a global trade crisis or a sudden interest rate spike, could trigger a chain reaction that destroys wealth overnight. In this video, we'll reveal the 10 shocking reasons Australia's economy could collapse and what it means for you. Stay tuned, because what you're about to learn could change everything. Australia is drowning in household debt like never before. Right now, the average Australian owes over $60,000 in personal loans, credit cards, and mortgages, and that number is still climbing. Imagine a country where millions of families are one interest rate hike away from financial disaster. That's the reality we're facing today. High household debt is not just a number, it's a real danger to your lifestyle. When debt levels rise faster than wages, people struggle to cover everyday costs. Suddenly, a small increase in mortgage rates or an unexpected medical bill can push households into serious financial trouble. And when millions of families are stretched thin, even minor economic shocks can spark a nationwide crisis. Economists warn that this debt creates a domino effect. If households start defaulting on loans, banks tighten credit, spending drops, and businesses start failing. That's how a financial ripple becomes a full-blown economic collapse. So what can you do to protect yourself? Start by tracking your debt carefully. Know exactly how much you owe, what interest you're paying, and which debts are the most dangerous. Consider reducing high-interest loans first and avoid taking on unnecessary new debt. Even small steps, like budgeting carefully or negotiating better loan terms, can create a buffer against economic shocks. The truth is simple but harsh. The more debt you carry, the more vulnerable you are. And in a country teetering on the edge, that vulnerability could turn into disaster fast. Australia's housing market is like a balloon stretched to its limits. Over the past decade, property prices have skyrocketed, with some cities seeing homes double in value. At first glance, it looks like a dream for homeowners, but behind the shiny facade lies a dangerous reality. The market is massively overinflated, and a sudden deflation could wipe out the wealth of millions. Here's the scary part. Most Australians are heavily invested in property. Your home isn't just where you live, it's often your biggest financial asset. If the housing bubble bursts, millions could see the value of their homes plummet overnight, leaving them with mortgages far larger than the worth of their property. This isn't just theory. Similar collapses have happened before in countries like the US in 2008 and Ireland in 2010. The ripple effects would be devastating. Banks could face massive defaults, businesses would struggle as people cut back on spending, and the government would be forced to intervene, likely with measures that hit everyday Australians in the pocket. What can you do? First, be realistic about property values. Avoid taking loans that stretch your budget to the limit. If you already own property, consider diversifying your assets so your financial security isn't tied to a single market. And if you're thinking about buying, pause and research carefully. A sudden crash could turn an exciting opportunity into a financial nightmare. The bottom line is clear. Australia's housing market may look strong, but underneath, it's a time bomb ticking silently. When it explodes, millions of lives could be affected, and there may be no warning before it happens. We put hours of research and effort into making this video just for you, so drop a comment below and let us know your thoughts or experiences. If you found this helpful, subscribe to our channel. It's just one click to stay informed and prepared. If you feel like your money doesn't stretch as far as it used to, you're not imagining things. Inflation in Australia is climbing at its fastest rate in decades, and everyday essentials like food, electricity, and fuel are becoming more expensive by the month. For millions of households, this isn't just an inconvenience, it's a silent financial squeeze that slowly erodes savings and living standards. Imagine going to the supermarket and realizing that the same basket of groceries now costs hundreds of dollars more than last year, or filling your car with petrol only to pay nearly double compared to a few years ago. These rising costs aren't just numbers on a spreadsheet, they directly affect your life. Families are forced to cut back on spending, delay important purchases, or rely on credit just to make ends meet. Economists warn that high inflation doesn't act in isolation. It interacts with other factors, like rising interest rates and stagnant wages, creating a perfect storm that can push households into debt and businesses into struggle. Left unchecked, this can trigger a nationwide economic slowdown where millions feel the pinch all at once. So how can you protect yourself? Start by tracking your spending carefully and identifying areas to save. Prioritize paying down debt and consider investing in assets that traditionally beat inflation, like property or certain commodities. Even small lifestyle adjustments, like energy-saving strategies or smarter grocery shopping, can stretch your dollars further. The harsh reality is this: inflation is slowly eating away at your financial security, and if Australia's economy faces more shocks on top of rising costs, millions could find themselves struggling to keep up, and the hardest hit will be those who aren't prepared. Australia's economy might look strong on the surface, but beneath the numbers lies a fragile dependence on global markets. From mining exports to imported goods, our financial stability is deeply tied to the world. This means that when international markets stumble, Australia feels the shock almost immediately. Think about it. A trade war, a sudden drop in demand for iron ore, or a global recession can cause profits to dry up overnight. Jobs could vanish, factories could close, and entire industries might struggle to survive. Millions of Australians could feel the effects even if they've never invested internationally. The danger is that our economy isn't isolated. It's like a chain reaction where a problem halfway across the world can hit your wallet at home. The COVID-19 pandemic gave us a small glimpse of this reality. Global supply chains broke, imports slowed, and suddenly essentials became scarce and expensive. Experts warn that future disruptions, whether geopolitical tensions, climate disasters abroad, or sudden commodity price crashes, could hit much harder, creating waves of economic instability across Australia. What can you do to protect yourself? Diversification is key. If your income relies entirely on a single job, industry, or market, consider building alternative streams of income. Learn about investing in different sectors, or even explore skills that can work internationally. Being prepared for global shocks doesn't mean predicting the future. It means reducing your personal exposure to risk. Australia's economy is powerful, but its connection to global markets makes it fragile, and when the next international storm hits, the impact on everyday Australians could be swift and unforgiving.
Even if your finances are solid today, there's one silent threat that can turn your world upside down overnight: rising unemployment. Australia's job market is facing growing pressure from automation, global competition, and economic slowdowns. Experts warn that if the economy worsens, millions of Australians could lose their jobs, leaving families struggling to pay bills and cover everyday expenses. Job insecurity doesn't just affect those currently unemployed, it spreads fear and uncertainty across the workforce. When people worry about keeping their jobs, they spend less, which slows down businesses, and the entire economy starts to weaken. It's a vicious cycle. Layoffs cause less spending triggers more layoffs, and suddenly a recession takes hold. Picture this. One day, everything seems normal. You go to work, pay your bills, and plan your future. The next day, your position is cut, savings are dwindling, and bills are piling up. This isn't far-fetched. It's exactly what happens during economic crises. So, what can you do to prepare? First, build an emergency fund that can cover at least 3 to 6 months of living expenses. Second, invest in skills that are in high demand, especially those that can withstand automation or economic downturns. Finally, consider diversifying your income, like starting a side hustle or freelance work, so you're not reliant on a single paycheck. Rising unemployment isn't just a statistic, it's a personal threat to financial security. And with Australia teetering on the edge of economic collapse, those who aren't prepared could be facing a very uncertain future. While households and businesses struggle with debt, there's a bigger, less visible problem looming over every Australian: government debt. Right now, Australia's national debt has soared past $1.3 trillion, and experts warn it's only growing. At first, that number might seem abstract, but the reality is shocking. The government's financial health directly affects the economy, your job, and your savings. Why does this matter? When a government owes more than it can easily repay, it has less room to respond to crises. Need stimulus during a recession? Tough. Want to support struggling businesses or households? Limited options. In extreme cases, high government debt can trigger higher taxes, reduced public services, or even cuts to essential programs that everyday Australians rely on. Imagine a scenario where interest rates rise suddenly. The government must spend billions just to service its debt, leaving little for hospitals, schools, or social support. Ordinary citizens could feel the impact in higher taxes, reduced government assistance, and more expensive public services. And while most people focus on their own debts, this hidden financial burden can create ripple effects that reach every household. So, what can you do to prepare? Stay informed about government spending and economic policy. Diversify your financial assets, avoid over-reliance on government benefits, and plan for scenarios where public support might be limited. Even small steps, like building personal savings and reducing reliance on loans, can give you a buffer against sudden shocks. The truth is stark. Australia's soaring government debt is a ticking bomb, and if it triggers a crisis, millions of ordinary Australians could feel the impact before they even realize what's happening.
Australia's housing market isn't just expensive, it's becoming impossible for many to enter. While property prices continue to soar, wages are growing at a fraction of that pace. This growing gap is creating a housing affordability crisis that is hitting young families and first-time buyers the hardest. Millions of Australians are finding themselves priced out of the dream of owning a home, forced to rent for years or even decades. The consequences are serious. When housing costs consume half or more of a household's income, families have less money for essentials like food, healthcare, and education. People are forced to take on larger mortgages, stretching their finances to the limit. If interest rates rise or the economy slows, these households could quickly find themselves in financial distress, unable to keep up with bills or mortgage payments. This crisis doesn't just affect individuals, it affects the entire economy. Young people delaying homeownership means delayed spending on furniture, appliances, and renovations. It slows economic growth and makes wealth accumulation increasingly difficult for an entire generation. So, what can you do? If you're buying, plan carefully and don't overextend yourself. Consider smarter saving strategies and explore alternative options like shared ownership or regional property markets. Renters can budget wisely and save for future investments. Awareness is your first step. Understanding the risks allows you to protect your financial future even as housing costs rise. The harsh truth is clear. Australia's housing market isn't just booming, it's locking out millions from financial security. And unless you act proactively, you could be trapped by costs you can't control, while the broader economy teeters on the edge. For many Australians, it feels like no matter how hard you work, you're falling behind. That's because wage growth in Australia has been stagnant for years, barely keeping up with inflation. While living costs, rent, groceries, utilities, continue to rise, paychecks aren't stretching any further. This creates a quiet but powerful financial squeeze on households across the country. The problem is more than just numbers on a payslip. When wages stagnate, families struggle to save, invest, or plan for the future. Even modest lifestyle improvements like buying a new car, renovating a home, or going on a family holiday can feel out of reach. Over time, this stagnation can trap households in a cycle of debt and financial insecurity, making them extremely vulnerable to economic shocks. Economists warn that declining wage growth doesn't just hurt workers, it weakens the economy as a whole. When people have less disposable income, spending drops, businesses earn less, and job security diminishes. It's a ripple effect that can slowly escalate into a national economic problem, especially if combined with rising debt, inflation, and unemployment. So, how can you fight back? First, focus on upskilling. Acquiring skills that are in high demand can help secure higher-paying jobs. Second, explore alternative income streams like side businesses or investments to supplement stagnant wages. And third, budget carefully to make every dollar count while planning for long-term growth. The truth is stark. Australians are working harder than ever, yet earning less in real terms. If wage growth doesn't improve and the economy faces further shocks, millions could find themselves struggling just to maintain their current lifestyle, setting the stage for a financial crisis that hits close to home.
When people think of economic collapse, they rarely think about fires, floods, and droughts. Yet in Australia, climate change is becoming one of the biggest hidden threats to the economy. Extreme weather events are not just environmental disasters, they have real financial consequences that can ripple across households, businesses, and government budgets. Take the devastating bushfires of recent years, for example. Entire communities were destroyed, crops wiped out, and infrastructure damaged. The financial cost ran into billions, but the human cost was even higher. Families lost homes and savings, businesses lost revenue, and insurance premiums skyrocketed. And it's not just fires. Floods, cyclones, and prolonged droughts disrupt industries, drive up food prices, and force government spending to surge. The scary truth is that these disasters are increasing in frequency and intensity. Economists warn that Australia's dependence on agriculture and natural resources makes it extremely vulnerable. When farms fail, exports drop, supply chains break, and unemployment rises, all of which weaken the economy further. What can you do to protect yourself? Start by planning for emergencies. Have savings set aside, invest wisely, and consider insurance coverage that protects against natural disasters. Diversifying your income or assets can also shield you from sudden financial shocks. The reality is stark. Climate change isn't just an environmental problem, it's a financial one. And as disasters become more frequent, the economic impact will hit households, businesses, and the government hard. Millions of Australians could find themselves struggling to recover, even if they've done everything right, showing just how fragile the economy really is. When most Australians think about economic collapse, they picture rising prices or job losses. But one of the most frightening threats lies in the banking and financial system itself. Banks are the backbone of our economy, holding the money we earn, save, and invest. If this system falters, the impact could be instant and devastating. Australia's banks are heavily exposed to household debt and the housing market. If mortgage defaults rise sharply or property values collapse, banks could face massive losses. Credit could tighten overnight,
leaving businesses without loans and families unable to access funds. In the worst-case scenario, savings could be at risk and a financial panic could spread like wildfire, affecting millions of people who thought their money was safe. The global financial system is deeply connected, meaning shocks abroad, like a banking crisis in another country, could quickly ripple into Australia, causing interest rates to spike, stock markets to crash, and everyday Australians to feel the impact before they even realize it. So, how can you protect yourself? Diversification is key. Keep savings in secure accounts, avoid overexposure to high-risk investments, and consider economic signals that indicate stress in the banking system. Building emergency funds that can cover months of expenses is another essential step to safeguard your financial stability. The reality is chilling. While banks may seem stable, the hidden risks are enormous, and millions of Australians could face the sudden loss of wealth or financial security. In a country already struggling with debt, inflation, and economic pressures, a banking crisis could trigger a chain reaction that affects everyone, rich or poor, employed or retired.
Australia's economy is facing a perfect storm of crises. From skyrocketing household debt in a fragile housing market to stagnant wages, rising unemployment, and climate-driven disasters, the warning signs are impossible to ignore. Add to that government debt, reliance on global markets, and risks within the banking system, and it becomes clear millions of Australians are at risk of losing their financial security. These aren't distant, abstract threats. They affect everyday Australians, from young families trying to buy their first home, to retirees relying on their savings, to workers fearing job cuts. The economy isn't just numbers, it's real people facing very real consequences. Understanding these risks is the first step toward protection. Knowledge gives you power, allowing you to plan ahead before a sudden shock hits. While no one can predict exactly when or how the next crisis will strike, being aware and prepared can make the difference between surviving or struggling financially. The truth is stark. Australia is teetering on the edge, and the choices you make today could determine your financial future tomorrow. While the threats are real, there are concrete steps you can take to protect your finances. First, focus on reducing debt. Prioritize paying off high-interest loans and avoid taking on new, unnecessary debt. This will reduce vulnerability if interest rates or the economy shift suddenly. Second, diversify your income and assets. Don't rely solely on a single job, industry, or investment. Explore side income opportunities, freelance work, or investments in sectors less vulnerable to economic shocks. Even small alternative income streams can provide a crucial safety net. Third, build an emergency fund. Aim for at least 3 to 6 months of living expenses in a safe, easily accessible account. This fund acts as a buffer against job loss, unexpected bills, or sudden market downturns. Fourth, invest wisely and cautiously. Focus on assets that historically retain value during crises, such as property in stable regions, government bonds, or inflation-protected investments. Avoid speculative risks that could amplify losses. Fifth, stay informed and proactive. Track economic trends, government policies, and personal finances regularly. The more aware you are, the faster you can respond to warning signs. Finally, plan for emergencies. Insurance coverage, long-term savings, and lifestyle adjustments can make a huge difference. Preparation is the key to survival. While no strategy guarantees safety, taking these steps now can protect your wealth and your future, giving you peace of mind, even as Australia's economy faces turbulent times. If this video opened your eyes to the risks Australia is facing, share your thoughts in the comments below. We want to hear how you're preparing. Don't forget to check out our previous video for more eye-opening insights.
We put a lot of effort into bringing you these videos, so please support us by subscribing. It's just one click to stay informed and stay ahead.